Good morning and welcome to the August 2025 Director's Cut. Thank you to everyone for joining us, both online and in person. I am Ashleigh Thiel, the UIC and Treating Plant Manager for the Department of Mineral Resources, and I am presenting in place of Director Anderson this month. First, we would like to thank the DMR team for their great work and dedication to the DMR and to the state of North Dakota. Like past months, I will start with the director's cut, and then Justin Kringstad with the Pipeline Authority will give his update. Then we will both return at the end to answer any questions. This month's director's cut has the same format as in the past. However, we have added a couple slides that help with understanding cycle time fluctuations and lateral length trends in the state. I'll note the August director's cut will cover June 2025 production numbers. You want to progress it for me? All right, starting with state production, June was at 34,538,486 total barrels, or 1.15 million barrels per day. This is up 3.49% from May to June. If you look at the absolute numbers for the total barrels produced over May and June, it doesn't look like that large of a change. However, there is one less day in June, so it equates to 38,867 total barrels of oil increase from May to June. Moving to gas production, we had 102.1 BCF per month and 3.405 BCF per day. That was a 1.46% increase from May to June. Here we have production broken out by county. The black line shows, we'll pause here for a minute until we can get this figured out. All right, we're back. So this breaks out the production by county. The black line is the percent of state production for each county, and the blue bar chart is the oil production by county in millions of barrels. So McKenzie County has approximately 31.5% of the state production, and the top 5 counties on the left side of the chart make up 96.5% of the production in North Dakota. On the top is the number of rigs broken out by state, and on bottom it is by basin. Total rig count in the U.S. is at 539 rigs. Texas is currently at 242 rigs, which is approximately 44.9% of the total rigs in the country. North Dakota is at 29 rigs. This is a drop of 3 rigs as expected, based on conversations with operators over their drilling schedules. Here we have the rig count over time broken out by state. We'll note here the U.S. rig count has declined as expected over the last 3 months, and a notable decline in the Texas rig count from 262 rigs in June to 242 rigs currently. Here, the onshore rig count is broken out by basin. The Williston Basin rig count is remaining steady at 31 rigs, 2 of which are in Montana. As of when these numbers were pulled, the WTI oil price is at $63.76, Henry Hub gas price at $2.77. The North Dakota market oil price increased in June to $60.40. I will note that the revenue forecast will adjust to the newly budgeted $59.50 per barrel starting in July, which will be presented on next month's director's cut. There's also in the bottom chart 49 frac crews, which is up one from last month. Moving to permits and completions, the total well permits has remained in line at 99. If we move to extended reach permits, there are 47 4-mile lateral permits, and 3 4-mile wells have been completed in North Dakota. We have 15 U-shaped lateral permits and 2 J-shaped lateral permits. Also looking at the completion trend, which is the green line, total wells completed is up slightly to 77, which is expected considering summertime operations in North Dakota. We were requested to look at cycle times. This is a new graph to this presentation. It's showing the average cycle time in days by month. The top blue line is the spud to stimulation phase, which is the time from the first spud of the well to the last stimulation. And the orange line is the stimulation to first production phase, which is the time from last stimulation to first production. As you can see, there's a decreasing trend, which indicates that cycle times are improving, and this is because operators continue to find operational efficiencies. Looking at the well count, the total number of producing wells is up 172 wells. As reported last month, the inactive wells increased in May. And that was likely due to operators electing to curtail production due to oil price. After conversations with operators, we expected this trend to continue into June, which is indicated by the red line on the graph. However, it is expected to decrease in July, which will be reported on next month's director's cut. Here we have the completed footages over time. This slide has not changed much other than the 2025 numbers continue to increase. This slide represents the lateral length progression over time. The blue line is the 2-mile lateral percentage in the state. Orange is 3-mile and green is 4-mile. The total percentage of 2-mile laterals over the past several months has decreased to approximately 70%, and 3-mile laterals has increased to approximately 30%. The production on the Fort Berthold Indian Reservation is up in June at 161,167 total barrels, an increase of 8% or an increase of 11,938 barrels per day. The rig count is at 2 in June, which is up 1 rig from May. The total active permits is down slightly at 134. Moving on to gas capture, the statewide flared gas total increased from May to June, and the statewide gas capture decreased to 94.5%. We believe it is likely related to scheduled gas plant maintenance that occurred in the month of June. And I will now hand it over to Justin Kringstad for his update.
Thank you, Ashleigh, and good morning, everyone. Justin Kringstad, Director of the North Dakota Pipeline Authority. Great way to wrap up an exciting week. We've had a lot going on. We'll dig into some of that here later this morning. So we'll get rolling here. Just a quick update from our neighbors to the west there. Eastern Montana, they have seen some increasing oil production. Those 2 rigs that Ashleigh mentioned staying active. And being able to slowly keep creeping up their production. We keep that in mind, obviously, with all the oil logistics, natural gas logistics, NGL logistics. We all share the same system, so it's important to watch what's happening with our neighbors there. The one thing I'll point out here, this is the month-to-month changes. The third item down, which is the gas-oil ratio, still on that upward trend, slight downtick for the month of June, but nothing out of the norm. We did see some shifts in the way that crude oil was being moved out of the Williston Basin in the month of June. That's the percentages by month, but if we look at the trends, we saw a drop in the pipeline market share, and we saw an increase in the rail market share out of the Williston Basin. I'll do a little bit of digging to see what was going on behind the scenes on that. No, very, just taking a look at some quick metrics. There wasn't anything that really stood out to me, but like I said, I'll dig in, and if there's something I can share by next month, I certainly will. Those rail volumes, you can see them tick up here somewhere in that 170 to 180,000 barrels per day. Typically, it's closer to that 130 to 140,000 barrels per day. So a noticeable jump up in rail movements out of the Williston Basin. The destinations, this is May data. This is the latest we have, but we did see some shifts in the reporting from the EIA here. They showed a little bit increase in volumes. You can see down at the bottom, down to the Gulf Coast area, a little less so. They've adjusted their numbers down in those PADD 5 Pacific Northwest deliveries, and it's still relatively steady around those East Coast, low teens to 10% volumes headed that direction. We look at what pricing was doing in May. Again, this doesn't answer anything for us in June, but this is the latest that we have. PADD 1 being the strongest priced markets, followed up by PADD 5 and then PADD 3. We look at real-time pricing information. You can see a widening in that Brent WTI spread, now north of $4 per barrel. That has typically in the last number of months been closer to that $2 or sub $2 range. Creep up in the WTI at Houston pricing relative to the Cushing marketplace. On the negative side is what you're seeing up in that Clearbrook market. We've had a period of time where we had a good run in the positive market scenario to WTI. That now, as of the latest data yesterday, had a minus 85 cents to the Cushing market. So that is a negative indicator. When we look at pricing in the North Dakota marketplace on average, we saw another dip down, $7.67 below WTI was the average price that the tax department was seeing come in. That's the lowest price since back in the 2020 range. So that is something that when, as Ashleigh mentioned earlier, the revenue forecasts, that number tries to account for this discount to the benchmark. The higher that discount is, that negatively impacts, obviously, all stakeholders, the royalty owners, the citizens from tax revenue, the industry themselves. So that is certainly not a number that we like. We would like to see that improve here in the coming months. Imports, exports, no major changes, very minimal movement in those imports, exports by truck and rail across the border there. Flaring up to 5%, up 1%, still within relative norms for what we're used to seeing here. No major changes in the categories of why that gas was being flared. Some of the indicators you'll see here in a moment, such as new wells getting connected to gas gathering, no major issues. That 1% jump from 4 to 5% month over month, not concerning at this time unless we start seeing some other data and some other trends start to emerge. The EIA, their August oil price outlook did look noticeably different from their July outlook. They took another haircut to their pricing outlook. You can see that in the upper left-hand corner. They have a very bearish outlook for the early part of 2026 before some minor improvement throughout next year. That is driven largely by what they're showing in the bottom right-hand corner, which is, again, stock builds at a global level. and even higher stock builds with decisions being made at the OPEC level. Things are seen at the production and consumption level. So again, that's where they're at today. This will ebb and flow. We'll see where they're at next month, but that stock builds, have the market on edge for sure. No major changes to announce on the natural gas processing front here today. Natural gas transmission, this is where I suspect there may be questions later. This is where a lot of the focus has been this past week with a decision yesterday. We'll start with the basics before we talk about some of those projects. No major shifts in that northern border market share, at least on a volume basis. Typically now continue to ebb and flow in that 80 to 85% market share of that system being fed by North Dakota and eastern Montana volumes. We've seen in recent days a downtick in the BTU level on the northern border pipeline system. So that anytime you see that red line, those BTU numbers dropping, that is freeing up space on that system. That's ethane that largely that's being pulled out of the residue system. Decisions being made at the plants, putting that ethane into the pipeline system, leaving North Dakota on the NGL stream versus in the residue stream on these pipelines. So low BTU, higher capacity available for those producers. So this was the decision that came out yesterday from the Industrial Commission at their meeting. If you recall from previous months, there was two projects that had responded to the Commission's request for information. That was the WBI Bakken East project and then Intensity Infrastructure Partners. So this is just the latest information at that meeting yesterday. The Commission decided to move forward with continued negotiations with WBI Energy. So an exciting announcement to keep momentum moving forward on their system. One question that has certainly come up since that time is the Intensity Infrastructure Partners project. I've not spoken with them since the meeting, but one thing that I want to make clear that the decision yesterday was not a regulatory decision saying one can go, one cannot go. The marketplace is still active in this. This was a decision for the state to move forward with one company. That does not mean anything for the other company. And so they can continue forward. They can continue to work in the commercial space. So we'll see how that all continues to evolve. But I just wanted to make sure that was clear that did not mean that this was a one or the other. That was just the state moving forward in its position and its capabilities with one of those two systems. We'll touch here in a moment. Northern border, there will be some noticeable changes here next month in September. At the September director's cut, certainly I will dive into some of the impacts of it. But the Bison Express project, which has been in the works now, that is a system from Glenola, North Dakota, that will reactivate a 30-inch pipeline from Glenola, North Dakota, down to the Cheyenne hub. As part of that, there are a number of compressor station upgrades that were necessary. And so in that maintenance and upgrade process, some of the impacts of that will be felt next month. There's roughly a 200 million cubic feet per day decrease in capacity on the whole northern border system as a result of those compressor station upgrades. So that will be noticed in the marketplace. We will likely, we'll see how that competition between North Dakota and Canada moves forward. I'm hopeful that there will be minimal impacts on North Dakota oil production, but there still may be some. So next month, I'll be able to provide some more color on the impacts of that maintenance project and whether or not we will see that then down the road in future production reports. So with that, I will stop there and welcome Ashleigh back up and we can handle some questions. Anything? Yeah.
Yes. Ashleigh, you mentioned that there was an outage there. Was that a planned outage or was it not?
From what we have been told, it was scheduled. If you need more information, you can reach out to the North Dakota Petroleum Council.
So it probably wasn't a long one then, perhaps.
I'm not sure on the length of time.
Sure. Okay. Good one. Okay. So I have to ask, Justin, what are your next steps in the Bakken East?
Yes, so great. So the next steps, we will get back together with the WBI team. Because of that decision yesterday, a lot of things that were sticky shook loose. And so the marketplace is going to be moving here in the coming days and weeks on folks getting signed up. There will be a decision, and that came yesterday. There will likely be a lag in time here as further conversations occur before you start seeing things back at the commission for further details. But it will be actively moving forward, and then the commission will get involved with any final decisions on contract terms and commitments.
You haven't heard from Intensity since.
No.
The $59 per barrel that you mentioned, was that worked out with OMB? For the forecast going forward?
Yeah, so OMB, that revenue forecast that starts the last month in July, yes, that gets set through the OMB process and their advisors. Yeah.
So just an overall question, how are producers feeling right now? Have you talked to them or?
I would just say that this is Nathan. I would say that producers are in a position right now with oil prices where they are, where it's not really attracting a whole lot of additional capital. So it's a hard, $60 a barrel is a hard environment for operators to get really excited about, but it also doesn't put them in a position to decrease activity too much either. So they're kind of waiting. I would say it's the wait and see game. And I just don't think 60, low 60s is an environment where it attracts a whole lot of additional capital, whether it's in North Dakota or any other basin in the state, or in the United States.
That's what I have. Anything else? Or is there any online?
There is one online. Was there a record number of producing wells operating in June? 19,494, correct?
I don't have that answer necessarily in front of me, but that is something we can get back to them on.
I'm good.
Okay, you're good?
Following on from Nathan's comment regarding operators opting to wait and see, do you reckon oil output will be steady then in July, August?
I'll comment a little. Yeah, so I am expecting, given what Ashleigh was talking about with frac crews, completion numbers, the summertime, I do expect that July we'll see an improved oil production level. Yeah, and August has thus far been relatively consistent with those July numbers. So do expect a couple good months coming.
I agree with what Justin says. We do know that in May and June, there's certain operators had, because of the low price environment, that operators had curtailed some production in the state, and that VMR believes that curtailed production is coming back online during the month of July and August. So I agree with everything that Justin said there.
Could you please remind me how many frac crews are currently active in North Dakota compared with July?
14 versus 13.
14 total versus the 13 prior.
Are you seeing any impact from whiting outage or heard any update on the whiting situation?
No, we don't have anything currently, but we can get back to you on that.
I need a little more clarification.
Yeah, we probably need a
Because
little more
lighting
clar-
outage.
yeah.
Is it gas, oil? What are they talking about?
Okay, that is all from online.
Okay,
Right.
well, great. Well, thank you, everyone. Appreciate the time.